You're watching Newzroom AM. Let's give you the markets update now. Mixed activity expected to continue in the markets following the world economic data. Yesterday, the JSE rallied as diversified miners rebounded from a sharp sell-off. Let's unpack these now, and we speak to the head of foreign exchange execution at Rand Merchant Bank, Matete Thulare. Good morning to you, sir, and good to talk to you once again. Let's start with how the global markets are expected to end the week. It is a Friday.
Happy Valentine's week, Tony. So I suppose, look, the pressure remains relentless on the Rand at this point in time. We have made a 3-month high, touching this morning at 1822. The Rand is continuing its weaker trend again yesterday, obviously after trading to 1824 yesterday afternoon. Across the board, the dollar is strong, and all our fellow emerging market peers are also in negative territory. So if you look at all the stronger than expected US data and also the hawkish tone from some Fed officials that is suggesting much more interest rates from the US, and obviously for them to continue being higher for longer, that is now going to be the theme for the next few weeks. And obviously this is in their effort to fight the runaway inflation. Already 2 Fed officials coming out yesterday in separate speeches that the central bank out in the US is going to maintain their current interest rate trajectory. Now, the top risks for the Rand at this point in time are obviously locally, as we all know, the ongoing load shedding and Eskom sentiment, the investor sentiment. There has been a huge amount of foreign bond selling. Just for this month, we've seen foreigners selling about 30 billion rands worth of local bonds. And then going into next week, there's also much more elevated levels of risk, given the fact that we've got the upcoming budget speech by Minister Godongwane, and also, the potential grey listing that has been spoken about. On top of that, it's all still about the 2 I's, which is inflation and interest rates globally.
Yeah, let's talk the currency, and you couple that with the commodities in general. How is the Rand faring among other emerging market currencies, and also the outlook on commodities?
Look, I think if anything, when we just look at the Rand at this point in time, unfortunately, the other thing that did come through this week is you saw the likes of the ratings agencies, Fitch and Moody's, coming out to say that, look, the power outages are going to affect, business. They're going to affect the consumer sentiment and also the investment sentiment, which is already weakened due to the country's subdued economic growth. I mean, there's already research houses forecasting that we will grow between 0.3% to about 1.2%. On the back of that, the Rand has obviously been the second worst performing emerging market currency. Now, when you just also look at that, also just from what consumers on a day-to-day spend in terms of petrol prices, we have seen oil prices on track for weekly loss, especially after the strong U.S. economic data, which is obviously heightening the concerns that the Fed will increase interest rates even more to tackle inflation. Obviously, a move that has hit the oil prices. Now, oil prices have fluctuated over the past few weeks between fears of a recession hitting the U.S. economy and the global economy, and there's been hopes for a pickup in demand for China, because obviously that's the world's biggest top oil importer. Now, there are reports suggesting that China makes up nearly half of this year's oil demand, obviously after they've relaxed their COVID-19 rules, but remaining in, what we think will be a hindrance is obviously the restrained production by OPEC Plus, which means obviously there could be a supply deficit. Now, already the Saudi energy minister has said that the OPEC Plus deal that is there to cut oil production by at least 2 million barrels a day would be locked in up until the close of 2023. So it's obviously going to be interesting to see how the demand and supply for oil obviously plays itself out, and how it will also play for South African consumers, given the fact that already we are struggling with high petrol prices.
Yeah, let's talk inflation now, and more of this data expected to be released. What is the expectation from the Bank of England?
So if anything, I think the rising, risks to the US inflation and also the UK's inflation obviously remain high even after, official data showed that there has been a decline to 10.1% of inflation in January from the 10.5% that we saw in the UK. Now, the Bank of England is likely to raise interest rates by 25 basis points next month at their next meeting, obviously as inflation risks are still too high to ignore. Now, in order to significantly ease the concerns about inflation persistence, the MPC out in the UK has said that they need to see signs of inflation easing in the services industry beyond the seasonal items such as travel and recreation, which is obviously anticipated by the MPC out in the UK. And then if you look at the US as well, I mean, already you're starting to see some Fed members are starting to mumble about a potential 50 basis point hike next month. I mean, already we were anticipating a 25 basis point hike. Yesterday, you're seeing the two speakers saying that, look, there's a compelling case for them to rise by another 50 basis points. And obviously it looks like this, the US Central Bank is now starting to also give the global market some sort of guidance that next month it's not going to be 25, it's actually going to be 50 basis points.
Sure. Let's talk company news. What do we know about the Standard Chartered buyback?
So if anything, I mean, StanChart, they've upped their guidance and announced a bigger than expected buyback as they reported Q4 results against the backdrop of speculation that they might be taken over by a Middle Eastern financial services company. Now, they've started this $1 billion, share buyback imminently, and they've also proposed a final dividend of 14 cents and also a full year payout of 18 cents. Now, the bank's future is under microscope because the First Abu Dhabi Bank they confirmed in January that they are exploring bids to, take over the emerging market-focused StanChart Bank. Now, the CEO of StanChart has said that, he's trying to bolster his argument that the bank is better off as an independent firm and also trying to waive off all the interest that is coming through from the Middle East. Now, they're hoping that the optimistic income growth that they're looking for this year, thanks to the rising interest rates and also the brightening economic outlook, will obviously mean that this deal does not fall through. And I think this is why they've also started the 1 billion share buyback, which has obviously boosted their share price in the interim. So it is going to be interesting to see how also that potential corporate activity will play itself out, especially given the fact that the First Abu Dhabi Bank is really, putting a lot of, speculation that they will take this StanChart over.
Yeah, let's conclude the conversation then with Zeta's performance since they stood alone. How are they looking?
So if you remember, Zeta is obviously the company that owns the Avis and Budget brands. Now, they've begun a new journey in December as a standalone company after unbundling from Barloworld, and they've obviously reported a 23% increase in their core profits in the 3 months till December. Now, they've maintained that their position is to capitalize on the recovering economic growth and obviously economic activity that we are seeing in the car rental and leasing businesses locally. Now, the company which obviously owns the Avis and Budget brands has, benefited from the increase in demand that we did see from domestic and international travel in the December quarter and obviously in that festive period. But compared to the same period a year earlier, if you think about it, Toli, this is when we had the Omicron COVID-19 variant. Now, on the back of that, on a like-for-like comparison, this is why you've seen the 23% increase in their core profits. They've also maintained that they have a change in strategy, from relying too heavily on travel and tourism related activities, and now they're going to deem what they call a subscription-based model for individuals and corporates that use their services more regularly and provide a predictable revenue stream over time, given these contracts that they plan on rolling out to both individuals and companies. So I think in that sense, this is why you're seeing that they're changing strategy, and obviously the mere fact that there's increased demand now is obviously, boding well for them, and hence the good results that they've reported over the past 3 months.
Matete Thulare, let me thank you very much for that markets update. He is the head of foreign exchange execution at Rand Merchant Bank. Thanks indeed.